Hey guys, happy Friday and welcome to the second YouTube video where I'm going to be talking more about our real estate strategy. Um, I've had several people ask me how we invest in real estate, but we try not to accumulate a lot of debt. So I'm going to go over our strategy for how we invest, and I'm going to be talking specifically with what we've done, and hopefully it'll inspire you to maybe start in real estate investing. For us, it's been a really good experience. We live in Ohio and it's freezing. That's why I'm wearing my little fleece jacket here. It's so cold, but, and excuse my voice, I have a little bit of a cold, but for us, it's been really great. So I'm going to go over just what we've done, and I have some notes that I'm going to be looking at so I stay focused. But so we started in 2012. We bought our first property. Actually, my husband had bought a house and I had a house when we got together. And we decided to live in my house and we rented his house. So that was technically our first real estate property. But in 2012, we decided to jump in and buy our first property together. So that house was listed for sale for $42,000, and we at the time had around $10,000 in the bank, and we were able to get some additional funds from my 401k. So that's how we jumped into the real estate game. So we actually, at the time, we knew the property had been on the market for over a year, and we had gotten some inside scoop from our mortgage lender, and we decided just to offer $28,500 just to see if that would be a valuable or a viable offer, and they actually took it, and we offered all cash at the time because we used my loan, and we used the cash that we had in the bank. So they actually accepted the offer, and that was our first rental property. And we actually have that rental property today, and it's been really great for us. We have awesome tenants there, and they've been with us since 2012, so we've been really lucky. So currently we have 9 units. We have 2 duplexes and 5 single-family homes. Our real estate worth right now is around $770,000, and we have about $550,000 of that paid off. So that's our net worth right now. Well, I shouldn't say that's our net worth, but that's the net worth with our properties. We have other additional funds that would contribute to our net worth. But so that gives you a little bit of background for us. So we've been doing this for a little while, so we have some experience, and we're trying to work with our investments so we have the majority of them paid off. And the reason we like to do this is because we feel that we want to manage our properties. We don't really want to hire a property manager. And this is completely out of the norm of what other investors do. So if you ask, somebody their strategy, they're going to be completely different than ours. And we have several friends that are in the real estate investment market also, and their strategy is completely different. And that's okay. This is just our comfort level, and I'm just going over what we typically do. So if you ask somebody else, if you go to like a real estate investors meeting, you're going to hear how they're, planning to cash flow $100 to $200 a month, and they're planning on building their investments as fast as they can, and that's totally cool. It's just not how we're handling our investment properties. So what we typically do is we buy most of our houses as foreclosures, or if they've been on the market for a long time and we know that we have room to budge on the asking price. The house we just bought this past fall had been on the market for almost a year, and we knew we had wiggle room on that property. We knew that the property would be valued at around $80,000 to $90,000. We look at Zillow and we kind of get an idea, a rough estimate of what the value of the property would be. We knew it was around $80,000 to $90,000, and I think we got that one. Greg will probably correct me if I'm wrong on this, but we got that one in the 40s, low 40s. So we already knew that we could put maybe $10,000 into it, and we spent I think around $7,500, maybe a little bit more, to renovate the property and rent it. So already if we went to sell it, we would make a decent amount on it, which is good. So we generally buy foreclosures. So the house after our first rental property was a duplex. We actually bought a duplex, and we bought that as a foreclosure. We spent around, I think it was $61,000 or $62,000 on it. We actually acquired a tenant. She was already a tenant. They let her stay, so we kept her as a tenant, and the other side was vacant. So we decided to go ahead and renovate that other side. We spent about $10,000 on that side to fix up. We had to put an air conditioning. There wasn't an air conditioning unit in. We had to put a new furnace in. We had to do cosmetic renovations, and I think there might have been something else we had to do that was a larger investment. But it totaled around $10,000. We then rented that property out. And then the other tenant decided after about a year that she wanted to leave. So she left, we renovated the other side, and spent another $10,000 on that property. So we had $61,000 in the initial investment, and we spent about $20,000 to fix it up. So it was around $81,000 that we spent total on that property. We earned income from that property for about 2 years. So roughly we made around, I want to say, $1,300 a month on that property. And then we went and sold it about 2 years later for $115,000. So that's kind of like a long-term flip, essentially. Buy and hold properties, when I think of buy and hold, I think of properties that you're holding for 20 to 30 years as rentals, only rentals. So in this case, this is more of like a long-term flip because we kept it for like 2 years. We waited till we hit the peak of the market and then we sold that property. That's been some of our strategy in order to buy properties and get them paid off. So I'm going to go a little bit deeper in that in just a few minutes, but we do have a mix of our long-term properties, like our first property, Greg's old house. Those are kind of like our long-term properties. Excuse me. The house we just bought, it's already paid off, so we're probably going to keep that as a long-term investment. And then the duplex that we bought, oh gosh, it's been almost a year now. Bought it like in April. We're considering that somewhat of a long-term investment, although we are also considering putting that on the market. So I'll get into that in just a few minutes too. So, and I'll dive into that a little bit here in a minute. But so we generally try to know our end goal when we're looking at our property. So for example, like our first property that we bought, it's Packard. We call it Packard. It's on Packard Street, but that one we kind of always figured would be more of a long-term rental because we just, got our money back out of the property already. Within 3 years, we got our money back, and we just kind of figured it'd be more of a long-term rental. And same with Greg's old house, and we have a duplex that's really close to us. We consider it a long-term rental. So we have no really interest in selling those properties right now. So that's what we consider a buy and hold property. There's other ones like our duplex, our second house that we bought that we considered, once it got to the peak of the market, we would go ahead and sell. So it just depends on your strategy, but this is how we kind of bring everything together in order not to accumulate a lot of debt and to be able to manage like a smaller amount of properties and bring more cash flow in every month. We decided that we wanted to have the majority of our houses paid off. We didn't really want to acquire the debt long term for those properties. This is where we differ versus, bigger investors, and they're going to make probably a lot more money than we will in the long run. But the way we do it is by those long-term investments or those long-term flips. So generally when I think of a flip, I think people keep the houses for 30 to 90 days and then they flip it to make a profit quick. For us, we buy the house, we buy a foreclosure or, something that's going to be a really super good deal. We fix it up. We let it acquire equity. So we let it acquire some extra value basically. And after like a year, maybe 2 years, we go ahead and put it on the market when we think it's hit the peak of the market for the area. So that's been our strategy. And then we collect all of that cash and then we go buy something else that we can pay off like immediately. So we can just go buy something for cash. And then we can rent that property and then all that money comes into us. Besides, keeping money for maintenance fees, we have to keep the security deposits, all that kind of thing. So that's our strategy as far as not acquiring a lot of debt by buying low, fixing up, and then trying to sell high. And then acquiring another property that we can try to pay off and then get all of that money coming in per month. And that's how we have a lot more cash flow and passive income quicker. And again, I know that's not a lot of people's ideals. So if you go to like one of my favorite real estate websites, it's called Bigger Pockets. A lot of those investors are looking to cash flow $100 to $200 extra per month. And then they keep buying new properties, keep building upon their portfolio, and that's totally fine. But again, that's just not how we feel. We feel like if we have a smaller portfolio, it's easier for us to manage. We don't have to hire, a property manager. We can just do everything in-house. So that's what we do. So I kind of mentioned the property that we bought last April. So that one was like a 6-month renovation, and that took a lot out of us. And it's actually not in the area that we generally will invest. So we like to have all of our buy and hold properties within like a few miles of where we live, because it's just easier in case something happens or we need to get over to the property. It's just easier. So that one is like 30 minutes away, and that's not crazy. It's not like a long ways away, and we've, fixed up pretty much every inch of that house, but it's not in the ideal area where we want it to be. So we bought that property, that duplex, for $26,600, I believe, and we put probably $25,000 into it. So we put a lot of money into that property. So we have roughly like $55,000 to $60,000 into it. We've talked to our realtor, and she thinks that we could probably sell it for about $115,000 with the way it sits. So we're planning on putting that one in the market on February. We have been struggling back and forth on whether or not to do that, because it cash flows pretty well for us. It's already paid off. We don't owe anything on it, but we are considering putting it on the market to buy something larger, like a fourplex, so like a 4-unit, almost like an apartment building. And we have discussed in the future potentially selling a lot of our buy and hold investments to buy a larger apartment building, like a 12-unit or a 20-unit building. Because it almost makes sense if you want to have more rentals in a smaller area just to take care of one property than take care of a bunch of different properties. So that's something that we are considering. So our plans may change just a little bit, and you might find that with yourself as well, that if you get into this, that you may, consider flipping initially just to get some extra money build up, and then you start buying properties to rent. So looking at that long-term passive income. And that's totally okay. A lot of people do it differently. They come in with a different strategy, and then their strategy changes as things happen. But I'm just kind of giving you like what we do. But so that's the property we'll be putting on the market. I'm just kind of going over my notes here real quick. Just a quick side note too. Other investors are okay with handling that debt because the tenants are usually the ones paying down the mortgage over 30 years. So if you think about it, if you have a property that you're considering a long-term rental and you have tenants in there that are paying it off over 30 years or 20 years or whatever you set the term to be for your loan, if they're paying it off over 30 years, then you have all of that equity built up and you have your house paid off. So say you buy like a 4-unit building for $250,000, and over 4 years, or over, let's say you take a 15-year loan. So you have a 15-year loan, you're getting that cash flow each month. So maybe you're getting $200 a month on that one property. That's extra, but they're paying your mortgage. So after 15 years, the property's paid off. So now you have that $250,000, and you may actually have a little bit more of the equity that's built up in that property. So when you go to sell it, you have, let's say, $275,000. That's all cash coming back. Excuse me. So that's the way they look at it. They look at it as, I'm going to hold this investment, have it build equity over the long term, have something that's paid off, and it's kind of like their retirement, which I totally understand too. But we're looking to retire early. So that's our game plan. We want to just make sure that we're making smart investments. We're not in over our heads. We have, we don't want to acquire too much risk. And that's why we're trying to just build up houses, pay them off, and then that way it reduces risk. So say we have a property that's, vacant for 2 months. It's not going to be a big deal because we don't have a mortgage on the property. And that's the way we look at it. But again, other people look at it differently. So, so I guess that's how we look at our strategy, and I'm hoping that kind of gives you some insight on the different ways people do it. If you have any questions, please feel free to email me right now. My email is still becky@freedomtofreedom.com. I did change my site over to Simply Intentional Life, just because I feel like it embodies who I am a little bit more, and what I want my blog to encapsulate as far as like life. But feel free to email me. I love answering questions. I love real estate investing. Greg and I have a lot of fun doing this, and we're constantly looking at houses. So if you have any questions on how to find a deal or anything like that, we would love to help you out. So anyways, I hope you have a great Friday, have a great weekend, and next week we'll do some other type of real estate investing video. So have a great week, guys.